The International Energy Agency thinks global oil demand will peak in 2030 at 105 million barrels per day and begin declining a few years later. OPEC thinks it'll peak in 2050 at 120 million barrels per day, and consumption will plateau for years to come, maybe even decades. This is an incredibly important distinction for Canadians. If the IEA is right, Canada would be bonkers to expand oil sands production and build new pipelines. This is why Alberta Premier Danielle Smith put so much energy into discrediting the IEA, calling it a radical political organization, and claiming its forecasts have never once been correct. Alberta and the oil companies are all in on the OPEC worldview. It justifies their demands to double provincial oil production to 8 million barrels per day and build pipelines to the west, east, and north coasts. We should be framing the debate over pipelines this way. Do we believe OPEC's rosy view of oil's future, or the IEA's much more pessimistic view? If we think about pipelines that way, Canada's opinion about the IEA is important, which is why I asked this question. What does the Canadian energy regulator think about the International Energy Agency? As it happens, 2 years ago, I interviewed the CER's chief economist, Jean-Denis Charlebois, and the IEA was part of the conversation. Here's what he said about the IEA's credibility.
We chose to rely on the IEA because we believe it is a credible organization. And if we would have chosen, we could have chosen other points of reference for the global context, but we thought the IEA provided the level of credibility we needed, as well as the level of transparency and accessibility in its results, analysis, and data for us to use it, and also for others to have transparency into what is it that underlies those numbers.
Charlebois goes on to make a point that is not well understood by Canadians. Oil sands production requires a great deal of capital spending up front to build plants and infrastructure, but the operating costs are very low. This enables producers to remain competitive even when prices are low. But low prices are not the biggest threat to the oil sands. That would be bitumen's very high emissions intensity. The cost to lower that emissions intensity is very high, making Alberta's heavy crude much less competitive.
Canadian producers are facing very real decarbonization costs, and those costs are most acute for oil sands producers versus conventional producers because of the emission intensity of the two methods of production. So what we see through the projection period is that, relatively speaking, conventional production tends to be more resilient because of that GHG intensity and the fact that conventional producers do not face the same decarbonization costs as oil sands, and also because of the shorter time period in terms of recovering capital, which is especially important in an environment where price is declining at a pace that is somewhat worrisome for producers that don't have perfect foresight into the future as it relates to pricing.
You can listen to the full interview on episode 185 of the Energy Talks podcast. I'll include the link in the video description. For the record, Energy Media favors the IEA worldview. Why? There are plenty of reasons, but this is the most important. Road transportation makes up 45% of global oil demand, and China is driving the electrification of the auto fleet much faster than anyone expected. So fast, in fact, that petrochemical demand growth won't be able to replace the decline in demand from road transport, which is what OPEC assumes in its modeling. This is why, even though it may not be obvious, the question of the IEA's credibility is critical to Canada's pipeline debate.